Hello, dividend executives. Welcome back. You know, it is Wednesday. The stock market is open. So you already know we are buying stocks and we are adding assets to our portfolio. Luckily for me, the stock market is down big time today. And so what we get to do is we get to buy some assets. We are down $276 as of today. Like I said, big pullback. It's actually been a big pullback year to date. If you look at it, down 3.66% or $602. We're still just barely riding above even. But we just keep adding assets and we don't really care. So we got a lot of buying power. We have some options on the table. This TSLL is getting absolutely wrecked. But we have plenty of options and we have plenty of time for that one too. And we have earnings coming up. So lots of time there. So we are just going to buy some stocks. If we take a look at the dividends, they are pretty much the same as last week for the most part. We had just under $200 or just under $200, I think 194 worth of dividends come in this month. Starting it off with JEPQ, and the rest of them just trickled in. Obviously, our YieldMax funds are coming in as well, and that brought in quite a bit of income. And then let's scroll up to the top here. We still have PSEC coming in, and then we still have a few others. We have Devo, SPHD, and a few laggers at the end of the month. So those are the dividends for the month. As you saw, we keep it transparent. We show all the dividends coming in, and we are we are knocking on the door of that $200 a month. So if you are new here, this is a dividend only portfolio. My goal purely is dividend income in this account. I sell options here and there just to try to bring in some additional income as well and buy us more dividends. But for the most part, we just buy stocks each and every single week at a minimum of $100. And we build this portfolio out. So today, when the market's down, is a perfect time to build a portfolio. And so we are going to do just that. Our first purchase today is one of the newer ones we added. It is a quarterly dividend payer, and that is ExxonMobil. We have a small position of this, market value of $50, and we have half a share here. Per usual, we are coming in and we are buying our not 25 shares, that'd be crazy, $25 worth, which is going to add us 0.25 shares. I think ExxonMobil actually just hit a 52-week low, if I'm not... Let's see if I might be mistaken. Let me just check. 52-week low is 96.59. Yeah, so today ExxonMobil hit a 52-week low, which is a fantastic time to be buying shares. This was up as high as 120. So down to 96 is awesome. Overall, last 5 years, it is up 35%. Pays a pretty good dividend too, and up 146 for the max all time. So that is an ad for the account. Only $25, but still. We incrementally keep bringing that up. It's a quarterly dividend payer, so not a huge dividend, but we want to add it to the portfolio. I think it'll be good long term, and it's a good stock to hold. Another one we have on the docket is that we want to add to. We have ex-dividend day coming up, I believe, on the 27th for this stock, and we're going to pull it up here if I can find it. Oh, I must have scrolled past it. QQQI. Again, another small position in the portfolio, 1% as of right now, 8.98 shares, $157 worth of market value. And we got paid $5.38 for that this month, and I'm looking to increase that. So 62 cents per share. We, of course, are going to come in here and buy $25 worth. It's going to buy us 1.42 shares. And that's going to get us probably an extra dollar. So hopefully we can get around that 630 to 650 range next month, just from that purchase alone. It still leaves us as a relatively small position at $182, 1.16% of the portfolio, but a good add to the account. Another one that is one of the backbones to the account is JEPQ. This is a big portion of the portfolio, 7.73%, $1,219 or 24 shares. And we are up 8.94%, so we are going to be averaging up here, but we want to add another half a share. One of my favorite ones to add to. It's got a nice monthly dividend, and it's done really well over the last year, just kind of slowly going up with the Qs, and it's up 17.98%. So that one's looking good. Our dividend for that this month was $9.45 or 0.39 per share. So not bad. If we can get this over to $10, that'd be awesome. Then we are buying ourselves, a fifth of a share each and every single dividend that's paid out without having to do any work. So we added to ExxonMobil, we added to QQQY, we added to JEPQ. Both of those are kind of off the NASDAQ. And then now I want to add to one of my favorites, VTI. This is an awesome overall market exposure, which I think will bring some growth to the portfolio. We're up 10% on this position. Of course, we will be averaging up on this one, and that is okay. Another $25 into the Forever Fund, and it gives me another 0.1 shares. So we're up to 6.7 shares, just about 10% of the portfolio, which is awesome to see. And like I said, we're up about 10% on this position. So love to see that with VTI. Going to keep stacking this one and going to keep this as a big portion of the portfolio. 10% in VTI. We have 22% in SCHD. So there's 32%. And then JEPI's coming in at 6%. And JEPQ coming in at 8%. So yeah, between these top 5 funds, and VYM is one we've been adding to as well, is at 2.5%. We really are like 50 to 60% of all my assets are in SCHD, VTI, JEPI, JEPQ, and VYM, which is awesome to see. So you can see on the right, 3,500 in SCHD, 1,500 in VTI, JEPQ just over 1,000, 1,200. And you can kind of see where the heavy hitters are. Devo is another heavy hitter in the portfolio. SPHD is a monthly payer, but also another heavy hitter in the portfolio. And then it kind of goes down from there, right? We have a little bit here and there with these YieldMax funds. And there's a new YieldMax fund that just came out today, and that is the one we will be talking about. This is the Universe Fund of the Options Income ETFs. This is supposed to be, let me see if I can pull this up here. Pull up the doc. Whoops, sorry about that. See if I can pull this up, tiny URL. So they launched this fund today. This is the new YieldMax fund, and it is called YieldMax. The fund is a funds of funds, so it's an ETF that seeks to deliver monthly income to investors through the YieldMax funds, right? And they'll be primarily composed of the YieldMax ETFs as the underlying asset, and they're going to rely on synthetic covered call strategy in order to generate income. So this will be interesting. They're saying that they're going to equally balance it between all of them. And these are all of their current tickers. You could see we have a lot of these. We have TSLY, OARK, APLY, NVDY, AMZY, FBY, GOY. We have Connie, CONY, and we have SQY. They just keep adding more and more and more. And so as you can see, and probably as many other investors saw, it's just getting a little cumbersome, right? There's just too many tickers, and even myself, I'm like, man, I don't really want to own 10 individual ones, right? So maybe CONY going into the bull market, the crypto bull run, and SQY as well. But for me, like, I want to test this out, because if this does pay a pretty good, 2, 3, 4% per month, and the stock price doesn't move, I'm definitely considering selling like OARK, APLY, NVDY, AMZY, FBY, and GOY, and just putting it all into one individual stock. So I'm testing it out. You can see here most of these are between 2 and 4% on a monthly yield basis, which is a crazy annual yield. But this is something I'm going to be testing out in the portfolio. I bought 1 share of this today, which is 0.13% of the portfolio. And I just want to see what the dividends end up coming out. If the dividends are okay, then I'm going to look at maybe consolidating into this and just freeing up from all of these YieldMax funds. I just have too many of them. I don't mind letting them sit there and drip, but if I can consolidate them and still get a similar return, then that's way easier for me, way easier to manage, and way easier to look at. So that's the update for today. YieldMax came out with a new fund. We bought some of our favorite assets, and we continue building the brick each and every single week. And we just keep stacking. So thank you, everybody, for tuning in. As always, don't forget to drop the like. And we will catch you next week. Happy investing.